When you talk about Rigetti Computing, ticker RGTI, you're really talking about a stock that is, well, it's a quantum paradox, isn't it?
It really is, like Schrödinger's cat.
Exactly. It exists as this revolutionary future of computing and, at the same time, as a complete balance sheet nightmare.
And the question is, which one is the market actually seeing right now?
Welcome to D-Risk, a podcast where we provide a no-nonsense analysis of stocks. We're doing a deep dive on Rigetti today using data from this morning, November 13th, 2025. And what a ride. After a huge run-up, it's crashed back to earth, currently trading around $28.30.
And you can't even start to analyze the stock without first looking at the macro picture. It's a huge headwind.
A massive one.
Yeah, I mean, futures are mixed. The whole market is just holding its breath for today's Consumer Price Index report.
So for a high beta name like Rigetti, that just means pressure.
It's straight up selling pressure. When investors get nervous about inflation, the first things to go are the jam tomorrow stocks, the ones promising revenue 5 years out.
Which sets up this fundamental paradox perfectly. Because the story is incredible. Building quantum computers for governments, for huge companies, I mean, it's the stuff of legend.
It is, and that's why you still see 6 out of 7 Wall Street analysts rating it buy or strong buy. They're all in on the dream.
But our research shows that dream is colliding with some pretty harsh financial gravity.
It really is. You just have to look at the discounted cash flow models. They're estimating an intrinsic value somewhere between negative $1.37 and negative $3.85 per share.
Wait. Negative? How is that even possible when the stock is at 28 bucks? That's a staggering disconnect.
It's because the DCF models don't care about the story. They care about the cash. And Rigetti is it's a research and development machine that burns through money.
So high costs, not a lot of revenue just yet.
Exactly. The models are forecasting huge negative free cash flow for years to come. And I think the market is finally waking up to the real cost of building that future.
Okay, so if the fundamentals are screaming negative, it makes sense that the trading crowd is bearish.
Firmly bearish, and you can see it right in the numbers. The short interest is sitting at 12.27% of the float. That's a lot of people betting this goes lower.
A lot of conviction, yeah.
And the options market is, well, it's ringing alarm bells even louder.
The put-to-call ratio.
Yep, it's at 1.48, very high. That's a clear signal of fear. Traders are buying protection.
But this is where it gets really interesting from our research. It's not just random fear. If you look at the open interest, all the action is clustered around one spot.
The $18 strike price.
The $18 strike's like a giant magnet pulling the stock down.
Yeah.
That's where the big sophisticated bets are being placed.
And the technical chart just confirms this whole story. I mean, yesterday was brutal.
A punishing 9% drop, closing at $28.30.
Yes.
And the volume. My God, the volume.
Over 50 million shares. That is institutional distribution. That's the big money heading for the exits. It's not a few retail jitters.
No way. And it sliced right through the 50-day moving average, which was up near $34.
A critical level. That break tells you the bears are completely in control of the trend now.
And the selling didn't even stop at the bell. The after-hours volume was heavy, too. This feels coordinated.
So if you put it all together, this CPI caution, the disastrous valuation models, the bearish sentiment, and this technical breakdown, the outlook is pretty clear.
It has to be a bearish outlook for Rigetti. For now, at least.
For now, yeah.
Of course, we have to talk about the risks to being a bear here. What could go wrong?
Well, the CPI report, for one, if it comes in cool, the whole market could rip higher and Rigetti would fly.
And with that 12.27% short interest?
You'd get a violent short squeeze, absolutely. And, technically, the stock is getting close to being oversold, so you could get a bounce.
So what are the key levels we're all watching?
Immediate support is right around $27. That's the first line of defense. But that big downside target that the options magnet is $18.
And for the bulls to take back control.
They have to reclaim the 50-day moving average. They have to get back above $34 and hold it. Until then, the path of least resistance is down.
So Rigetti is still that Schrödinger stock. It's this incredible bet on the future.
That's being absolutely hammered by its present-day balance sheet. The market is opening the box, and right now, it's choosing reality over the promise.
That's all for this episode. Remember, this podcast is for informational purposes only and isn't financial advice. Do your own research or consult with qualified financial advisors before making any investments. Thanks for tuning in. Catch you in the next episode.